Welcome to TradeTheMBA.com. This is John. This report is for the 23rd of February. Well, we've had an interesting last couple of days. Monday obviously was the holiday, and then today, as it began, quite wild with the Ukraine situations and that, but given the stability within what we saw, there's more going on, at least from a market dynamic, than has to do with foreign events at this particular stage. We had seen that white MBI leading and magenta continuing to fall was still a short bias. Whether we would get all the way down to the 0% in a day or whatever, we came pretty close here. The NASDAQ did in fact fill that. As we can see right here, it hit the zero and then made a new zero and still within that. But you see the magenta moves above yellow at this particular stage, so that could give a little bit of support going in there. And also, instead of orange rising dipping down, if it dips down towards that 7.5, that's usually negative 7.5. Definitely a point of potential return. And now we have falling 23%, not 100% at this particular stage, but if we start to see the 100% diving on that also will drive price, kind of pulls it to the upside just from a balance standpoint, unless we continue to make new lows. So as long as you're making new lows, then not an issue. It's when it flattens out, and then you see the dip is where it tends to pull it up. Just from a statistics standpoint. Then we're looking at TLT here, which is treasuries, and of course the flight to quality, and that has decreased the yield slightly. But still, we're expecting that to make new lows, especially as the confirmation that interest rates are going to go up, at least from a market standpoint for inflation. Whether or not the Fed follows through, still an if question. From a euro standpoint here, we're just holding at that retrace of the 50% after the little up move, and that's mostly just the desire of the Fed. The ECB is in a real world of hurt because while they talk about raising rates, they really can't do so either because all of the special facilities that they've created are basically backed by other ECB notes. So where do they really have to go? Nowhere. The Eurozone, not like our Federal Reserve, doesn't quite have the same power and enforcement, particularly over all of its members. So it really is in a difficult spot because raising of rates there with all the countries running large deficits other than Germany, problematic at best. Gold continues its rise ever so slightly, and that's the way it's going to continue. And then you'll get big burst days, and then it'll flatten out and do the same. It's always been the pattern with it. Oil still maintaining up at its highs. If there does happen to be, serious conflict in the Ukraine, or at least some kind of bloodshed, I think you'll see oil spike even more dramatically. Regardless of the inflation element. I mean, you already see Germany it's already threatened to cancel or at least postpone certification of the Nord Stream 2, and that just it's sort of like putting sanctions on themselves because it doesn't really hurt Russia as much as it hurts all of Europe, and LNG prices skyrocketed because of it. So it's sort of like shooting yourself because the dog bit somebody else. It's like what? Makes no sense whatsoever. This makes complete sense. Bitcoin, been in a sell with that MBI white leading most. Every little attempted pop has been anemic at best with that shakeout. It's improved now to a positive standpoint, so this is the potential first recovery point. We had suggested that we would move back down towards that 39 and then lower in the 29 range, that gap in there where we had previous algo levels, but the selling on that pretty clean, and again, it just takes care of positive extremes that had existed. But amazing the amount of softness given what you would expect it to be rising with gold and not doing so, which kind of gives you the idea that maybe it's not used as an inflationary hedge like a lot of people thought, but more as a vehicle to trade and park money until it's needed, depending on market behavior, because at least the potential for return is greater than that of treasuries. From an ETH standpoint, it had based for a while and then started to build up and held on to that pretty well. throughout the day, and I think that just reflects the size of trade volume-wise from Ethereum and its use in a lot of different applications. China's Bitcoin there just a bit when it comes to a trade standpoint. From a 50K standpoint, started off with that decline, took part of that out, and then a little bit later for the secondary one under different cover scenarios, and then produced the buy right at the 50% range, which pretty much is where we're at right now. The steep decline in the white wouldn't be as bullish if it weren't for the fact that magenta spiked up, and when we see that spike up instead of continuing down lower below the NBI yellow, that's usually an indication for a turn up. So if it moves above, and this becomes easy from a 50K standpoint, 43.20, then you're looking for that 43.50 algo resistance, and then again we're right back to playing those same ranges in between. And intraday, this is where we ended off, had that nice big rise up, but of course, all positive extremes, and the irony is that 43 was a previous extreme from back, if we look, we go back further in the day, and all we did was come up above it slightly, filled it back in, went about an equal distance below it. So that's clear activity of algorithms building positions within it. And this is what middle of the day looked like here as we caught that sell, and it just continued to fade off of that. So that was pretty darn clean, and it still isn't even expressing where we had the early run-up, which was right here at the very start. And that caused the initial pop-up, and that was all in positive extremes. Almost filled back. Then it almost did it again that second time that we just looked at, but then once it finally broke off, it was pretty clean. And this is what it looked like in the holiday trade. We had this nice boost up again, also a couple of positive extremes in there, and it started fading off as tensions with Russia and that were continuing, and then broke even lower as futures opened for the new day. And but caught a pretty strong bid there in the pre-market setup. But you could tell once all these positive extremes started, particularly that late in a pre-market session with a lot of activity below, that usually you end up testing back down to those lower areas, and that's exactly what it ended up doing. All in all, pretty darn clean stuff. It's very clear when we get those configurations of the white NBI peaks, and or even when the white NBI can lead in a particular situation, when you get the turnaround spike up like we said with the 50K, this particular case here where they're both falling, then you get that freak magenta move back up, that's usually your indicator that things are going to start to improve for it, particularly when the white stays underneath that 10 or subsequently underneath the red, particularly if you get above that 33 level. But the fact that it kept hanging around at 25 is why you see that back and forth where it did even fill back a little bit more. So those become kind of clear indications, because you know you get into that strong buy power when you're above, well, in this case this was over 45, but when that magenta stays above that 33, it just maintains itself pretty consistently. But then it starts to fade, and that's where we look for those particular moves below the 25. Here was a nice divergence one that set up where dipped down, you even had blue under the gray D red line there, and then white spiking above right at the bottom, and then all of a sudden you get an immediate reversal, and you're thinking, oh my, devastated under that setup, because this particular case you still had a deep move of steel going back for the secondary one. Steel had moved up significantly and hadn't made that subsequent spike back below the negative 13.5. So this is a little bit stronger simply just because of that steel change, when this looks almost identical from a reading standpoint, looking at it from there. But the difference being right here in that you have what lower red DOC moving towards that 0, and then the spike up there. So a little bit of differences in there, and they might be subtle, but definitely was captured with the readings, which is why this stayed green versus the turn to red right here, and that finally led to the ultimate breakdown. But as always, I will keep updating you on relevance, but we are still seeing massive volatility, and that's expected. And this is something I talked about, at the end of last week, and that the rise in volatility is also a way to reduce liquidity and keep people from speculation. So it kind of causes them to want to move to safer, more secure situations, which of course the Fed always believes is treasuries. We'll see if it plays out quite like that. As always, though, trade well. We'll talk to you later.